Hello, everybody. This is Mike Bergmeyer from Whipstitch Capital. Thanks for joining us today. We are doing a live webinar. So yes, Nick just did make this at the last second, and the team is all here. So if we have snafus, this is reality. This is living a Zoom world. But thanks so much for joining us right now. We are excited that this is the last time, we hope, we will be doing one of these, and not essentially at a Natural Products Expo East or Expo West. But today we're going to talk about the Healthy Living Consumer Products Update report that we put out twice a year, usually a couple of days before one of the Expo shows. And as part of that, we've always done a top 11 trends. What we think in a very non-scientific view are the top 11 trends in the natural products industry. And we'll be going through that today and provide some information as well about the deal landscape and the deal world. It's been a highly active world in the past 14 months or so. So one of our colleagues, Tom, is running the slideshow. So next slide, Tom. So this is what we're going to try to accomplish in the next hour. We are going to have Q&A, so ask everyone to use the chat function that you have and go ahead and enter questions, and we'll take those at the end. We're going to give a little overview very quickly about Whipstitch Capital, and then my colleague Nick McCoy will talk about the capital market recap and just an overview. We'll then have a few of us from the team go through a couple of the top 11 trends. And then Enrico from Spins will give a market update with some great industry data as well. And then we'll go to Q&A. So importantly, a full version of this presentation with additional information on the deals that have happened over the past 6 to 8 months or so will be available at our website after this session. There's a section there called Our Take, and all of the reports that we've done over the years are there. So check for that later tomorrow. We're also going to be recording this, and that will be available as well, perhaps tomorrow as well. Next slide, Tom. So Whipstitch Capital, for those of you who don't know us, we're the largest independent investment bank in the US that is solely focused on the better for you consumer sector. We've got a large team, been doing this for quite some time, real experts in consumer, and headquartered in Boston, and living on the internet the past quite some time, it feels like. But you can find out more about us at our website. But there are some things that make us different. First of all, as a team, we own the company, so we're not going anywhere. This is what we do. We don't have to answer to anybody, which is great. We work with companies over the long term, many years. We have no rush in anything we do. Totally connected to the industry, and thank you all for joining today. We know all the investors, we know all the acquirers, we're talking to them very frequently as well. And all we do is consumer. And then we share a lot with what we've learned and what we're seeing in terms of gatherings like today, and then in-person gatherings, hopefully later this year at Expo East, for example. Next slide. These are just some of the transactions we've done. You can see more on our website. And so today, just joining me is like my colleague Nick McCoy I mentioned, and also two of our VPs, Greg Usich and Dom Mangano, which will be going through some of the trends, and Enrico Reyna from Spins. Sorry, Enrico, I just butchered your name. It's what happens when you talk and you're thirsty. But there's presenters from today, and with that, I'm going to hand it over to Nick.
Thank you, Mike. Slide, please. All right, so what's happened in the industry over the year 2020? It's a great question because there's been so many things happening to all of us, and it's been a really complicated year. If you look in total, as everybody knows, the retail, food sales are much higher than everybody expected direct to consumer too. It was a very good year for sales at the retail, customer buying level. And how does that manifest itself in deals? Well, did have a pause in deals this year. In Q2 particularly, when everything kind of stopped, deals really stopped. And we felt that firsthand too. And that's why I think you're seeing the M&A line down 5 up from the bottom on the right is a little bit lower than last year. but the financings went up a lot. And that's because the companies that were doing so well, selling so much product, continued to get financing from outside investors and their own internals. So I think the most telling line here is total transaction line. I think what we saw was a few which would have been deals turned out to be financings. And today, as conversations continue,
I'm gonna have to jump in. Sorry, this is we're proving that this is incredibly live. Nick, your internet is not working, so your voice is going in and out a lot, unfortunately. And maybe this is the last time we do live because of this.
All right.
The reality of COVID, people. Here we go.
All right. Can you hear me now?
Yeah, keep going.
Okay. Total transactions line is probably the telling line here, because I think we lost all of our M&A deals that would have happened this year to this year and next year, as we had a pause in M&A in Q2 when things shut down. And that's why we see more finance. The total transactions line is more reflective of the activity level that's going on in the market right now. And that's up significantly, 8% over last year. Next slide, please. If you think about big companies and what their objectives are, large CPGs have a playbook where they're very good at running very large brands, very complicated large brands, and they've got decades of experience and knowledge base in doing this. And so it just makes sense that as our industry grows and there are more large brands out there, and because we're a bigger piece of the overall pie, the average size of deal or a company getting bought by a big strategic continues to rise. And right now, if you look over the last decade, that's up about double, and it continues to go up every year, this year included. Next slide, please. So what happened specifically with M&A over this year? Well, as I said before, there was a pause in Q2. Of the deals that got done were deals that were in process, most likely, or very close to closing. And then a lot of things got delayed. Most of these delays were because buyers had, just amazing orders hit their supply chain. And didn't know what was going to happen next. Nobody knew. So things went on pause in many cases and then picked up later in the year. What's really telling about this chart is the gray line, which represents the total deal value, actually is much higher in the end of the year than it was in the beginning. And there's a number of reasons for that, one of which is that companies were getting larger and being bought for more money because they had more revenue, but there was also an increase in SPACs and other buyers. Next slide, please. So digging into SPACs, SPAC is an acronym for Special Purpose Acquisition Company. A SPAC is basically a blank check company or a company that goes public just to raise cash and hold it on the balance sheet. And then it looks for one deal. It can be a minority interest purchase. It can be a whole acquisition. Usually it's buying about 40 to 45% of the company. And then it has an additional cash reserve or what's called a PIPE, which is a secondary financing, so that it can go buy other companies to add on to it. We found that SPACs, after they de-SPAC or do the first deal, are very voracious M&A buyers. You've seen a lot of add-on deals with companies like Utz and Whole Earth Brands that have already been out there. And you can see in the chart below, SPACs are not a new idea, they're new in our industry, but they've been around in technology and healthcare and biotech for years. And we just happen to see a flood of them hitting the market right now. And that's great, because that means we're gonna have that many more buyers as we look into the future. Next slide, please. If we look at the public stock prices of the larger companies, generally speaking, the news is great. Everybody's up and they should be. Revenues are up. The one common theme here that you see, and this is generally speaking, it's not a hard rule, but on average, the companies that had a big on presence or restaurant or food service component of their business, those stocks have not gone up as much, which is why you see Anheuser-Busch, Molson Coors, Diageo lagging while the others are more up. Next slide, please. So overall, what is the consumer doing? What are the buying patterns? Well, people realized during COVID that they can take more action on their own health by what they buy in the grocery store. So if you look at Spins, Spins has 3 libraries. One is the total product library. That's all the products that are in Spins. The second one, which is the health and wellness products, or HWI, and that represents about 25 to 27% of the healthier products that are in the total pie. And then you have the NPI, or the naturally positioned products, and that represents about 1/3 of the health and wellness products. That is the healthiest grouping of the products. And you can see that overall, people are buying healthier products because the TPL, which is the broader conventional set, is lagging behind the others. And we've seen that trend very consistently starting around last March of 2020. Next slide, please.
And here we go, the top 11 trends. I'm gonna ask Greg and Dom to unmute yourself so you're all ready. We're gonna go in between this from team member to team member. And right now we will hit you with our unscientific top 11 trends in spring 2021. Drum roll, please. Number one, low sugar is something we talk about nonstop. And every year we try to figure out how are we going to not make this one of the top 11 trends, but it's here. And the big thing right now is it is mainstream. If you look here, a lot of the brands up top, these are all independent brands, private company brands, and we're seeing some intense growth. And the growth is coming from virtually all day parts and occasions. You have breakfast, snacks, beverage, candy, desserts. So people are avoiding sugar. But that said, there is still a sugar consumption epidemic in this country. The average American consumes about 20 teaspoons or 80 grams of sugar a day. But you know what? Our bodies were not designed to handle this. And that's viewed by the rise in diabetes, heart disease, non-alcoholic fatty liver disease. But Americans are learning, and what this data shows is they're changing their habits. The rise in popularity from things like the keto diet, where adherence to sugar avoidance has been playing a big role here. But you also have improvements in taste from products, from sugar substitutes like erythritol, stevia, monk fruit, and they've led to better, more available products. And while Americans consume too much sugar, it is by far the #1 food nutrient that consumers are looking to avoid. Down here on the bottom left-hand of the slide, you see 51% of Americans are seeking to avoid sugar. And this is what really made us make this a trend this year. Now on the bottom right, you have this. These are the most mainstream of mainstream products in the country. Coca-Cola and Hershey chocolate now offer 0 sugar products. These are not diet products, these are 0 sugar. And on our view, the enemy has been identified. That is trend 1. Now, number 2, Nick. You're on mute.
I know, this is real time. A variety of meat and dairy alternatives are emerging to meet different consumer needs. Slide, please. So if sugar is the enemy, I guess what is our new friend? It's meat alternatives and dairy alternatives in one form or another. And this isn't new, but it's certainly accelerating. Now we can really kind of take the meat-based alternatives and break them into 2 or 3 categories: minimally processed, processed, and cell cultured. And this is an evolution as you see this market growing. Why are they doing it? Health is the #1 reason. And there's some studies out there, some recent data that shows that mortality risk can drop as much as 5% based on protein choice. It's very powerful data, that alone. Environment, of course, sustainability. We're seeing that more and more important with consumer purchases and in brand ethos. People feel better, losing weight and animal welfare. Animal welfare has been a big driver of veganism and vegetarianism for years. That's one more factor here. To Dominic.
Thanks, Nick. And so with all the excitement for plant-based and alternative meats, we're definitely seeing consumers explore many new recipes while cooking at home. And so for today's 3rd trend, we're going to discuss how the increase in cooking at home will continue post-pandemic. So as I believe most of us or all of us have experienced, consumers have significantly increased their cooking from home during COVID-19. And this has subsequently led to a pretty significant lift in many food categories. Most notably, as we've highlighted on the slide here, recipe enhancing categories like spices and seasonings saw a sales lift approaching 30% over the last year. And to put this into perspective, this category typically grows about 2 to 3% a year. And so we're talking an over 10x lift as a result of COVID. And even more tremendous is when you look at specific better for you brands, whether it be Bonza, which is up 75%, Morton and Bassett, which is up 85%, and Kinder's, which is up over 200%. It's pretty apparent that both categories and many better for you brands saw a significant lift this year. And probably had many new consumers discover brands for the first time. So the question becomes, what's going to happen once the world comes back to normal? And obviously, in the short term and during the summer, we're likely to see a strong boom in restaurant sales. But interestingly, from the data we're seeing and surveys we've read, upwards of over 70% of consumers have found cooking at home to be sort of a silver lining of COVID, and plan to continue to do so at a higher frequency going forward. I know personally, I plan to keep up my newfound meal prep habits, and I think a lot of other consumers are in the same boat, whether it be for economic or for health reasons. It's just pretty apparent that we're all benefiting from cooking at home and plan to do so in the foreseeable future. So with that, I'll pass the ball to Greg Usich.
Thanks, Dom. All of us have heard the tagline that Americans are not drinking enough water. And it's true, 75% of Americans are chronically dehydrated, which leads to fatigue, memory loss, headaches, worsened moods. Everyone knows that feeling dehydrated is no fun. And this next slide is going to talk a bit about some of the trends that are going on here. I think specifically because with the rise of COVID, we've seen a heightened awareness around health and wellness, and hydration is top of mind. People sometimes forget that the human body is made up of 60% water. So by default, remaining hydrated is critical to supporting our health. And we've seen that bottled water brands are feeling some tailwinds of this increased focus on hydration and water consumption. The US bottled water category is estimated at over $20 billion of retail sales, so it's massive. And when you look at the data, we see that sparkling, enhanced, and flavored water brands are taking share. And then if you dig a layer deeper, we notice that across both still and sparkling water, growth in flavored is outpacing that of non-flavored. Brands like Hint and Spindrift continue to see strong year-over-year gains and greatly outperform their legacy counterparts. So the takeaway here is that Americans are still chronically dehydrated. The water market is massive, and there continues to be a great opportunity for challenger brands to innovate. I'm going to kick it to Mike.
Thank you, Greg. And of course, there's a massive COVID impact in all of these trends this spring. And number 5, consumers are more focused on immunity health and immune health than ever before. Not a surprise, but we've always believed the strong connection between food and medicine here at Whipstitch is something we talk about frequently. And the past 14 months have been a strain on all of us with maintaining health and building immunity in our bodies. It's perhaps become society's #1 goal, how to not get COVID. And if you do get it, how to minimize the negative health impacts, quickly recover, avoid long-term damage. Staying healthy has become our #1 priority out there. And you see it in the data. Interest is clearly up. If you look in the search data, nearly a 700% increase in Google searches for food and immune system. Pretty amazing. And that happened immediately when COVID hit last year. People are looking for immunity enhancement, not just from vitamins and supplements, but if you look across the world, 60% of people are saying they want to get support for their immune systems from food and beverage. And there's a strong willingness to pay for products that work. And it's amazing. If you look at the VMS sales data, it's very clear. There is a direct correlation between the increase of COVID cases and VMS sales. And I know my team has heard me talking about the benefits of vitamin D nonstop, I think for around 12 years or so. I think I made the first slide in the trend deck specifically about vitamin D about 10, 11, 12 years ago. Vitamin D and Manuka honey. I think I've kind of hit those things to death, but all of a sudden, April last year became very difficult to buy vitamin D. And more people know about the kind of what they're missing from vitamins, and also the positive impact that a lot of these immunity enhancing ingredients can have in their lives. And it's really amazing when you look at some these mainstream brands again, kind of like sugar going mainstream and categories. And so immunity claims are entering categories across the board, not just functional shots, but as you see in the bottom right, it's in cereal, it's in trail mix. So it is here, and people are looking for it, and people want to eat their vitamins. It's a pretty amazing thing to see. With that, I will push it back to Nick for number 6.
Thanks, Mike. Number 6 is that we're seeing a boom in globally inspired cuisines as consumers are seeking authenticity. So our population in this country is changing. It's actually changing more rapidly than projected right now. And it's becoming more and more diverse and less white. And that means that we're getting people from all around the world, which are going to be buying and pressuring retailers and giving upside to brands that are featuring flavor forward, authentic, global multicultural cuisines. And when you look right now at the high level numbers, you can see that the international products on the left are actually growing at 2.5 times the rate right now of the non-international products, looking at 2020 versus 2018. And that's been a consistent trend. It's really interesting if you dig into the data and you go by country, the fastest growing countries are actually the ones that have the least amount of presence right now in the grocery store. These are things like Morocco and Uruguay, which is really interesting, because that tells me that this isn't just the Mexican or Italian or kind of very, very large cultural cuisines. This is everything, and it's growing basically from the base like a pyramid. And I think this is something that over the next 10 to 20 years, which is basically our population change is not going to stop. This is something that's going to create a lot of upside and a lot of white space for a lot of brands. And passing back to Dom.
Thanks, Nick. And so similar to globally inspired cuisines, we're also seeing a strong increase in demand for what we call clean caffeine. So today's 7th trend is clean caffeine, shoppers seeking better for you energy. And I think we all know this, energy drinks, it's a massive category. After exploding onto the scene a little bit more than 20 years ago, energy drinks have grown to become one of the largest beverage categories in the US, nearly $14 billion in sales. It's supported by really strong margins and just continues to grow at an exceptional rate year after year. I mean, in a year like 2020, when on-the-go beverages like energy drinks took a substantial hit due to COVID, the category still managed to grow by nearly $1 billion in just retail sales alone. And we think this just generally speaks to the passionate consumer fanfare for the category. Yet, for whatever reason, with all these passionate consumers out there, this category has been a bit of a white whale for the natural products industry. And really no better for you brand to date has taken a material share of the category. And we here at Whipstitch believe this is just beginning to change now. And the reason being, one, consumers are generally becoming a bit more focused on ingredients when it comes to energy drinks. So after really not being an issue for quite a long time, new consumers to the category are generally just a bit more health conscious and ingredient focused. And older consumers who typically would have aged out of energy drinks are just now increasingly asking, what exactly are these ingredients in the energy drinks I'm drinking? Why is there so much sugar? I can't even pronounce some of these ingredients. And so they're all just generally seeking better for you alternatives. And the second reason we believe better for you brands have a real opportunity in the near future is that many of them are starting to crack the code on how to succeed in C-stores. So at the end of the day, energy drinks, it's definitely a mainstream category. Over 70% of its revenue comes from the convenience store channel. And so you have brands, whether it be Rowdy, Guru, Clean Cause, and many others, they're all doing exceptionally well in the convenience store channel. And this is largely due to the fact that they've, in our opinion, kind of mastered the way of positioning better for you brands for a mainstream consumer. And we believe this speaks to their ability to succeed in the C-store channel. And so overall, we're very high on the long-term trend of energy drinks, and we think better for you brands have a real opportunity in the near future to become a material part of the category. And so with that, I'll pass the ball back to Greg.
Thanks, the 8th trend today is the growing interest in men's skincare and grooming products. What we've seen is that it's now mainstream socially acceptable for men to want to look good for nobody other than themselves. Where historically, men's personal care and grooming products brands have focused on marketing a product that will help attract somebody else. If you think about those old Axe body spray commercials, that's a great example. But now we're seeing brands focusing on more marketing men's personal care and grooming products that make the user feel good about himself. And there's science behind this. Studies show that personal care has an influence on physical well-being, which means that there is data to back the old look good, feel good adage. And that applies to all genders, not just women. We're seeing challenger brands like Harry's and Keeps and others that are leaning into this trend and seeing great success. And it ties back to a much broader theme of gender norms changing and gender stereotypes fading away. And social media is expediting this shift. Old gender norms like women staying at home with the kids and men not getting paternity leave are going by the wayside. I actually had my first kid a couple months ago, and I'm super grateful to have been able to take some time off for paternity leave, especially knowing that my dad wasn't able to do that and his dad wasn't able to do that either. You're seeing men talking about getting manicures and pedicures, using moisturizing face masks. And these are things that were historically women-only activities. And it's playing into an even broader theme of kind of redefining masculinity. And you see it across CPG categories, not just personal care and grooming products. If you look at some of the old beer ads that were very focused on male chauvinism, you're now seeing some newer alcohol companies emphasizing the products and the flavor and the function and the taste. And while this broader theme of changing gender norms is permeating many CPG categories, it's definitely affecting the men's grooming and personal care space the most. And you're seeing it in the market with investors and strategics who are acquiring brands and investing in brands that are playing directly into this theme and are focused primarily on this category. And we highlighted some of those at the bottom of the slide, but we think that this trend is one that's here to stay, has a lot of headroom, and is ripe for continued disruption. Now I'll kick it to Mike.
Thanks, Greg. Continuing on with personal care, trend 9, functional beauty is continuing to grow in popularity. Functional beauty is a very interesting category. It's really blurring the line between healthcare, healthy food, and cosmetics. And what we're seeing is that people thinking about just cleaning your face or putting on makeup for looks alone, essentially neither have become good enough anymore. And we're seeing a lot of these products that are natural, organic, healthy for you, in that way from a formulation design. This is the global natural organic personal care market. It's about a $40 billion market with steady 5% growth in the past, and that's projected to continue. And of course, that's off a larger base. A lot of these products tend to use food-based ingredients like caffeine, coconut, avocado, and other vitamins, minerals, thinking about functionalities that like prevent aging, promote healthy skin, providing benefits like SPF sun protection with skin moisturizers, like functional skincare. And if you look at a lot of the brands that have recently raised money from venture capital or private equity, you see some brands that we think are real brands to watch, like Ilia, based on natural formulas. And this is skincare and makeup with SPF that kind of thinks about and uses sustainability in the formulas and packaging. Kosas Cosmetics, which is kind of blurring skincare and makeup together. Tula Skincare, talking about skincare that's good for you, and mostly the toners and brighteners categories. You have Hero Cosmetics that's working on the acne concealer category. And then Supergoop, premium all natural SPF with over 40 product options. It's just a category that we're seeing intense growth in, and we're expecting to see that continue. And with that, we go to number 10, Nick.
Yes, thanks, Mike. Direct to consumer is becoming a primary channel for next generation women's health brands. So direct to consumer has actually been around for a while, and since the turn to 2016 has actually been where a majority of companies first start, mostly via Amazon. It's really interesting because the women's health category is really seeing a lot of growth right now broadly. I couldn't resist but to take a look before this webinar And if you look at a category in spins like tampons, it's actually a pretty flat category. And if you switch to that HWI universe, it's actually doubled in the last 2 years. So we're still only at about 7% or so HWI versus 25% overall. And that tells you how much room there is to run on these things when you're thinking about healthier alternatives. The thing is, it's very expensive to educate consumers. And that's one of the beauties of direct to consumer, because a lot of these companies that are founding or kind of growing heavily in direct to consumer are getting people virally to their websites. And they have a lot of information there. And they're creating little social communities. And that's educating customers that the kind of band-aid solutions that have been out there, things that you take only when you have a need, instead of things that you might take to prevent a need, that, you know, these things that they gives information on them. And that's really powerful. And it's growing a lot of different subcategories, as you can see on the bottom right. And passing the mic for the last one.
Here we go. Thanks, Nick. Trend number 11. You may have heard of COVID. It's also sometimes referred to as the puppy pandemic. There is a surge in pet ownership that is going to boost the pet market for years to come. That is trend number 11. I surprised the team and threw in my own picture here too. This is us adopting our dog about 4.5 years ago. So we were ahead of the curve with the puppy pandemic. We're very happy to have Morgan in our lives. But go to the next slide where the data is. Okay, so you've heard a term that's also been used incredibly over the past year. People have turned to increased in-home consumption in food and beverage, soaps, sanitizers, VMS sales, like we've talked about. A term you probably heard about in the CPG land that we live in is COVID bump, the increase in sales. How much of that was one time? What will sustain? What is the new sales baseline? When you think about that, it's interesting, and you have to like look at the data and try to understand what's going on. Well, pet ownership is different. Yes, pet ownership in the US definitely experienced a COVID bump, but guess what? These pets are going to need to eat, play, get pampered, take supplements, eat treats for years. So it's been, I remember one of the early images of COVID when we were all, really stuck in our house early on. One of the nice images was to see across the country, really, from California to Florida, up here in Maine, where I am, the images of the empty animal shelters and all the dog adoptions and cat adoptions that were happening. That was kind of heartening. But this is a COVID bump that vastly resets the market size. More than 11 million households in the US got a new pet. And that was just between March and October 2020. So at this point, maybe we're talking 13, 14, 15 million households or so. And the data says 2/3 of US households now own a pet. There are 90 million dogs in the US. This is a huge market, in totality around $110 billion this year. And just like with people, pet owners think of food as medicine and are willing to spend for their pets. These are members of their family. And 60% of dog and cat owners are concerned about the quality of their pet's nutrition. And I thought one really interesting thing when we looked into the data too was that, you think about this as long-term and that, your pets will be around for a long time too. But that the owners, these families that are adopting and getting dogs and cats are younger, which is very long-term. 16% of the owners were Gen Z, 13% millennials were in terms of entering a new pet into their home during the pandemic. So we expect the pet market to see incredible sustained long-term growth. And we've got some brands to watch down here. And that is trend number 11, the puppy pandemic. So we've got our top 11 trends right here. I'm just going to remind everyone, we've had a question on this, that the presentation here, both a live recording, and it clearly is live. We've had internet issues, we've had muting, we've had all sorts of fun stuff going on. But
more fun stuff.
That was timely.
Yeah.
as well as this report. And actually, so I may have internet issues going on here while I'm saying this.
You're
I'm gonna
back.
hand it over-
You're back.
I'm back. We are live, folks. And now I would like to hand it off to Enrico, who hopefully has better internet than I do at the moment.
Yeah. Excited. Well, hey, fantastic trends from the Whipstitch team. Guys, love the top 11. And just how does that play within the natural product industry, guys? Over the last decade, the industry has more than doubled. You saw natural products, industry has seen incredible growth and evolution over the past 20 years. In that span of time, spins, market information and data and technology has really emerged as the common language and resource connecting natural brands, retailers, investors, and other strategic partners in the marketplace, directly fostering growth for better for you products in North America. So definitely a huge trend, as Nick and everyone talked about, around natural products continuing to grow over conventional products. The question we always get asked around is what's happening, the pandemic, what are you guys seeing to happen taking place here? And obviously across everything, we saw a sharp rise in sales growth. Pre-COVID, there was growth in natural products, and you saw a sharp spike afterwards. This is a strong demand for NPI products, definitely has increased around consumers as they focus more on healthy living, like trying natural options when other brands that they were going to or out of stock during the peak COVID weeks. We also saw a strong, uptick in conventional growth, which we think has maybe contributed to consumers, balancing their priorities around budgets that they might have and product that is availability on the shelf during the uncertain times that we had over the past 18 so months, similar to what we saw during the recession in 2008. And then you think about like cross store, what's happening is you're seeing tremendous growth in natural products. Is it happening across the entire landscape at retail when you walk through the doors? Innovation continues to blossom as shoppers, expect more from their dollars, whether it's new plant-based products, pet products, as Mike was talking about, or cocktail options for those that are just, tired of being at home and need to seek different opportunities. We definitely see enhancements across the board. Shopping patterns continue to evolve, and the key is on health and wellness. When you think about, at scale and what is scaling, we want to anchor, on certain core health and wellness attributes. With a greater emphasis at home cooking, health and wellness focused products gain more importance in the conscientious consumers' buying patterns in scale and conventional world. Example, examining top performing attributes by overall dollar and size and growth illustrates clearly the consumers are seeking cleaner ingredient profiles, humane treatment of animals, and recognizing the benefits of plant-based products and positions in the marketplace. So definitely you see a lot of scale in attributes and things happen in the natural channel, and they migrate to the conventional for at scale. And you're definitely seeing that as some core attributes here. Now I'm going to dive in a little bit. 2020 was a crazy year. We had the top 11 trends for 2021 by the Whipstitch team. There's a couple of trends that, Spin's team has really saw from 2020 that's going to continue to drive growth into 2021. And I'm just going to briefly touch on a couple of these now. Let's start with diet. Diet is a lifestyle, folks. Today, lifestyle has been kind of our passion. It used to be just, hey, I'm going to go on this diet, and we're on the diet for a couple of weeks and then we're off. It's really becoming more of a lifestyle. How are we living every day? How are we putting better products and food and beauty care and all that into our bodies and really living a lifestyle versus as a diet fad? And when we think about that, consumers are incorporating, different principles within their diets like keto and paleo, and how do they kind of seek to maintain those and routine features around the product? So when you think about products and communicating the products that communicate less sugar and carbs are as well as fewer additives will also be sought out by shoppers, leveraging components from across many popularized diets to construct a strategy that is best fit for themselves. So when you think about those brands that are like paleo eligible products, what do those represent? Those shoppers choose fewer additives, less refined sugars, and the absence of certain inflammatory agents like grains and beans and dairy in their diets. when you think about keto eligible products, those shoppers choose to be like more low and no sugar and fewer carbohydrates. And as you see here, like Sticks and Bones is a paleo bone broth, pasta sauce, and you have Union, which is a a charcuterie type of plant-based and meat kind of together snack that's better for you and a little bit more healthier. So you definitely see a large trend happening here. And then you think about the mealtime and what's happening, and as folks are cooking at home and getting some shopper fatigue around what do I purchase, what do I buy, what categories are kind of driving growth, and how are consumers looking at other options when they think about their current lifestyle. A couple of things that we're noticing is many retailers are offering home meal kits that are assembled in store. Sales of unprepared brands like HelloFresh and Local Crate are surging at conventional retail across the board. When you think about shelf stable and frozen options, those shoppers may prefer fresh meals, solutions of certain occasions. Overall growth trends show shelf stable solutions as the preferred choice for everyday. So when you think about everyday options, consumers are still reaching for those that are maintained on the shelf in the pantry, easy to grab and put onto a plate. But there's also that refrigerated option section where there is a promising fresh segments to key in on. While on the go segments cut into a lot of category growth from time to time, other meal driving solutions are continue to outpace and skyrocket, like refrigerated entrees, refrigerated burritos and tamales, those things that are easily to kind of put in the microwave and turn on and go and heat up quickly. And then you think about, snacking. I know all of us have been home for a long time, and it's like we're constantly snacking and eating and grabbing something because what else should we be doing besides, outside of work and what we're doing all day? So what we saw and look at is, shoppers are looking at ingredients for more for an everyday bite, turning to more health focused like coconut oils. MCTs are direct results of the popularity of the keto and clean eating trends. While probiotics and ginger, show that shoppers are keen in on digestive health and aspects of that. So, as the gut goes, is kind of the life goes, right? For most of us, if we're not feeling so great and in tune, we're not having a good day. So the gut health is definitely important for all of us. Now I'm going to turn my attention here a bit to, food is medicine. As Mike talked about and the team talked about, is folks are looking for alternative ways to get some of this immunity and boost. Want to share with you just a little insights onto how food has become more of a medicine for us all. So as expected, products touting immunity linked and cognitive enhanced functional ingredients such as elderberry, MCT, cider vinegar, moringa, and other functional mushrooms dominate the top 10 highest growth among popular functional ingredient entrees. And one thing that I've noticed is that I've essentially replaced my afternoon coffee with a little bit of pure extract elderberry that I throw in some hot water and drink. So it's kind of been a nice form for myself as well to ensure that I'm continuing to maintain a immunity up and being healthy as well. And then when you think about ingredients and what is in top of mind for most, beverages are fueling innovation and boosting ingredients that boost immunity and reduce stress and anxiety. With the pandemic still looming and large, for the continued innovation fueled by highly engaged shoppers seeking a wider range of wellness solutions in food and beverage. Innovation and growth of new products in familiar and easily consumable categories like tea and coffee and juice and water. Those are demonstrating that consumers are continually seeking elevated contributions to their health and wellness routine through trial-friendly everyday purchases. So when you think about immunity continues to be top of mind and has proliferated amongst all eating occasions, a heightened awareness and need for cognitive health has been evolving that has fueled innovation beyond the supplement aisle, with products containing mood-boosting ingredients like CBD, melatonin, theanine, are just out there and they're easier to digest and have from a beverage that's kind of at our desk all the time while we're sitting here at our in-home solutions. And then you think of adaptogens beginning to be more mainstream, in the supplement market. Mushrooms have taken center stage and are poised for continued growth across the aisle. And there are some brands down below that we're highlighting there. And then when you think about, beyond care, consumers, are expecting more from foods. What they're eating and continue to dine in and seek and optimize more health and, want to mitigate their risk from different viruses, especially COVID. And when you think about, a couple of the top trends that we were been talking about, you think about plant-based and how does that work? So plant-based, lifestyle has been touted for helping reduce cancer, health disease, stroke, diabetes, and mental health illnesses. Low glycemic and unsweetened kind of products. Consumers are increasingly recognizing that many benefits are carefully watching their sugar intake. All of us are looking to skim back on the amount of sugar and our routines that we have from a daily basis. When you think about nutrition dense, consumers are looking for products that are packed with heavy loads of protein, ancient grains, and other nutrition dense ingredients. My son came home yesterday from a soccer game and 9 o'clock at night, and I think he grabbed his powder of protein, and I was like, what the heck are you doing that so late at night? But he's getting all his protein in. So again, consumers and everyone from all ages are looking to increase their protein intake. And then you look at microbiomes, like the gut health, it's being recognized to influence all aspects of our health, from immunity to anxiety and even disease prevention. So again, gut health is definitely something that we all should be looking at and continuing to maintain a healthy care. The last thing here is, pets is, definitely had a record 2020 year as the pet industry has continued to grow and evolve. Mike has a lot of great trends on number 11 around the pet industry. Want to talk a little bit more about the overall channel here. So when we look at it, it's again a record year, 2020. With 24.8 billion in retail channel sales, it's just a wealth of growth. And even though that you still see a lot of happening on conventional products, natural is kind of where it's growing. Everyone, it's represents 15% of the total pet sales today, but it's growing 2 times faster than your conventional players. And Spins has been able to kind of bring this more to light in the market with our neighborhood pet channel, and really getting a view of what's kind of happening and growing in these neighborhood pet channels that are bringing newer, fresher products to eventually bring to mainstream. And when you think about, our pets and, all the new owners that are out there, you start to look at them and pets are wanting to, eat clean as well. Our owners, ourselves, I own a dog, we're looking always for fresher and lower processed foods in the marketplace. So when you think about in the total US MULO, natural channel, neighborhood pet channels, all saw substantial growth in both frozen and refrigerated pet food, which was a slight dip into shelf-stable products. These categories continue to increase and attract consumers, pet owners looking for products that are perceived as fresher. Similar to the trends that in our own diets, like we're all looking for a fresher product for ourselves, we're carrying that over to our new family members that are part of our group. Today's pet diets are undergoing similar shifts, human consumption, and they're more tied to human consumption trends. When shoppers, head to the pet store, they're not just grabbing the biggest bag of like kibbles and bits that you can find out there. They're doing their research prior to arriving and while they're reading labels at the store. They're not just grabbing the big box off the shelf. They're also double checking while they're in checkout line. When they're reading labels for their pets, shoppers often look for the same attributes that they look for their own food. Pet owners are interested in high protein food, natural ingredients, and a minimal or no preservatives or artificial flavors. So those are a couple of trends that are happening there across the pet landscape. And then when you think about like, geez, like fun, Mike. When you think about, pet food and these new trends are happening, it's obviously leading to more of a premium product at store and around the different types of premium products that are out there. So premium is the fastest growth opportunity across both food and treats for pets. And they post a 2 times faster greater than value products in the marketplace. When we look at the neighborhood pet channel, that channel holds the most premium and unique product mix that consumers are seeking for their pets. And so those are yet to really kind of be seen in the scale and conventional world. So there's a great opportunity to really understand the pet landscape as we embrace all those new pet owners and really kind of evolve into our family. I appreciate you guys' time today on learning just a little bit more on some of the natural trends and some of the trends that we saw from 2020 going into 2021. We are hosting the Spins Financial Partners Group is hosting a webinar on the 12th. And what we're really talking about is the role of consumer insights that is used in the investing community. So we hope for those that are attending here could hopefully join us on Wednesday, May 12th from 12 to 12:45, where we hear Patrick Knight, our lead consumer practice person, talk about some insights on how investors can leverage consumer panel.
Great, thank you, Enrico. And I'll ask the rest of Greg, Dominic to unmute. First, again, we do have Q&A right now. And so on your Zoom screen, you have Q&A and chat at the bottom. So go ahead and enter any questions that you might have. We can stay on for a bit here. So please do enter those questions. But first, I wanted to thank the entire Whipstitch Capital team and the Spins team as well, who really, do all the work so much, for us day to day. And, I've been working like crazy the past 14 months from home and remote, and have, really did all the slides and work for today as well. I also just want to recognize and welcome 2 new employees, Lauren and Sam, new team members. And as we've said, we're looking forward to meeting them because right now we have a very virtual relationship. My favorite part of the webinar, besides Nick being on mute, which, also was the #1 used phrase of the last 14 months, you're on mute. We got to get that in, was every time Greg started one of his trends, it started with this. And congratulations to Greg and his wife, Megan, who had a baby a couple months ago. So Greg is fresh back. He shaved, as he said earlier today, for the first time in months. And congratulations as well to Tim Souza and his wife, Becca, who recently had a baby too. So Tim is on paternity leave right now. And thank you, Enrico and Madeline too, for all the fantastic work that you guys have done. So with that, want to turn to some questions here. And we had one on sugar reduction, and of course it's a trend that we see all the time. It's a good question too. You see it a lot, and the question is essentially you see it very clearly in categories where sugar is a dominant ingredient. It's almost like ubiquitous with the product, like sugary sodas, confectionery, candy. But there is a question about those where sugar is used as an ingredient. How are we getting this 80 grams a day, right? It's in everything. And the person talked about invisible ways where we get sugar, like bread and cereals, and what we're seeing in terms of products like that and other categories with sugar reduction. And I had 2 thoughts, but I definitely want to open it up. And Enrico, you might be seeing this, especially in the data perhaps too. But I know if you think about keto diet, which is one of the big things that has led to an awareness of sugar, of the problems with sugar, and then getting it out of your diet. You have brands like Base Culture in the bread section that are really kind of staked a claim and making some fantastic products with no sugar on the bread side. And then on the cereal side, Magic Spoon, which really has built a brand off of no sugar cereal. What others? What are you seeing in this?
I think one of the broader themes in sugar and why we're seeing it transcend multiple categories is that the formulations have gotten a lot better, and food scientists have been able to create products with either much less or no sugar, or using natural sweeteners that actually taste like their sugar full counterparts. So that's why you see some of the big CPG companies coming in and creating products with sugar in them, because they feel like they're now at a position where the technology is there and they can make a product that actually tastes just like it did before they took any of the sugar out of it.
Yeah, 100% agree with those sentiments, Greg. You know, one of the clients we recently sold, Swerve, one of their claim to fame was that not only did they match sugar 1-for-1 on a taste standpoint, but they also had the same functionality from a cooking standpoint as sugar. And I think that's another component to the formula, if you will, is that you need to be able to brown like real sugar. You need to be able to bake just like real sugar. And there's definitely been a lot of advancements made there from a lot of better for you brands in the recent years.
I also think, just kind of taking a step back and looking at a high level, there's a lot of evidence that, you know, kind of beyond bread and cereal, people are purchasing things that are more nutrient dense. When you look at things like branded produce, you know, just shelf stable beans as a category, which is up, I don't know what it is this month, 30 or 35% or something over, you know, where it has been the last couple of years. And, you know, these aren't necessarily things people are using in everyday cooking, you know, more than they would be any other product that's on the shelf. But seeing people swinging toward that, I think, is also indicative that, you know, those people are moving away from sugar broadly.
Yeah. Greg, this one maybe is for you. You kind of have spearheaded the work. We've done a lot of work here at Whipstitch on the cannabis market, and Greg has kind of been the leader on that. But, you know, prognosis for the cannabis edibles and ingestibles market, and do you feel it will grow even more due to the pandemic?
Yeah, I think it will grow even more. I don't know if it's due to the pandemic per se. If you look at the syndicated data in cannabis, either through Headset or BDS, you'll see a very similar trend where there was a spike in consumption when COVID hit, and then that spike kind of continued up gradually over the course of the next 6 or 7 months. We actually had some information on that in the Expo East deck we presented to last time. But I think the driver in overall cannabis, and then edibles specifically, is really going to come from more of a regulatory perspective. The more states that add recreational cannabis, that's obviously going to be a huge driver. New York was the most recent. So that's a big piece of the pie. And then if you look at California, there's an estimated 60 to 80% of the cannabis consumption still is through the black market. So as pricing becomes more reasonable and people feel more comfortable buying cannabis through a legal market, that's where you're going to see those dollars shift from an untracked channel to a tracked channel, which is also going to lift the overall cannabis market. So, I mean, over 60% of Americans want cannabis to be legal on a recreational basis. I think COVID definitely maybe precipitated some of that a little bit in terms of the expedited growth, but I think more generally, cannabis will continue to grow because of other exogenous factors, primarily regulatory.
Yep, thanks. Nick, this one might be for you. And it's something you touched on earlier, but I think we can elaborate a little more. Any trends around the revenue size of smaller / private brands being acquired by the larger CPGs? You know, are they acquiring brands earlier or later in development, and you know, and then anything about multiples as well? So you want to talk about that?
Sure. No, it's a really good question. It's got kind of more than one dimension to the answer. So I think there's kind of two paths of exit these days. One is the revenue multiple path, which, you know, Mike alludes to, and that's the big CPG buying a company based on a revenue multiple. I think the bar from what we see on profitability of those companies has gone up. So in other words, if you're not profitable, there needs to be a path in the near term to it. And to the point earlier on big brands, like brands that are big CPGs, like brands that are larger because it fits in their playbook, that generally speaking, these larger brands getting bought, or these brands getting bought independents by big CPGs, are kind of in the mid hundreds, kind of north of 100 to 150. And there are some exceptions. We've seen some smaller brands that are in the double digits, which are not profitable yet, but are doing things like incrementally growing a category, or have some kind of a niche that kind of fits very nicely into a portfolio that can fit under one brand manager. Those type of situations exist. The other dimension of this is there with the SPACs and private equity firms moving into the market. If you have 5 million of EBITDA or higher, you're really in a great position to get bought as an add-on, either an add-on to a SPAC or an add-on to a private equity portfolio company that is creating a platform of brands. And once you get up to 10 million or higher, I think your chances of going out into a process and exiting with 10 million of EBITDA is probably higher in a successful process than your chance with 150 million in revenue, great velocity trends, and everything else. And that's just because there's more buyers.
Yep.
But as far as multiples go, I think the headline large CPG deals that you're seeing these days, for the most part, there are some exceptions around beverage and things, but the most part are kind of in the high 2s to high 3s. If you look at a lot of these, and most of these are not announced. And then if you look at EBITDA multiples, assuming that it is branded primarily and not private label manufacturing, if you've got 5 million of EBITDA, it's kind of high single digits, 8, 9. That exceeds 10 once you get past, or approach 10 million in EBITDA. The more borrowable that is, so the more consistent that is. And, it's not just because you had a COVID bump and had a lot of purchases in Q2 last year, because banks are really reluctant to lend on that. But the more consistent the EBITDA is, the more that people can borrow on it, and then therefore the higher multiple too. So there's a lot of considerations.
Yep.
And I'll just say one quick add-on there is, and Nick kind of mentioned this earlier, but with the influx of SPACs occurring, there are going to be more strategics that are going to be created, quote unquote strategics, in the near future. Those may be at a smaller scale, which may bring down the threshold for some of the strategics from a revenue standpoint in the future, as those businesses look to acquire for scale and growth.
Yeah, that's a very good point. I mean, one of the big things here is that, to Dom's point exactly, there are more and more buyers that will exist and that do exist right now. Someone had a question about the private equity market and recaps and kind of stepping up when the question about generally slower M&A markets. I would say that this is not a slow M&A market at all, and I think it's only going to be enhanced, or we think it's going to be enhanced through the influx of SPACs, which will be new public companies like Whole Earth Brands that bought one of our clients, Swerve, last year as a public company. And then private equity that is stepping up too. And in a lot of times competing with strategics to buy some great assets and some great companies, sometimes whether they're profitable or not. We're all seeing the news in the last week or so about the Oatly IPO. This is a business that has, reportedly about 60 million in losses last year, but we're talking about, I can't remember exactly, but 10 billion plus IPO in terms of the valuation. So, growth and market size and great brands and kind of being dominant can really matter there as well. So we've got a multitude of buyers that exist now and that they're also being created. Another question.
Just one quick clarification, Mike. Just because the word recapitalization was used in the question that Mike just referenced. Recapitalization sometimes has a negative connotation to it, because if you have a number of investors in your cap table and you do a down round, there are some times where you kind of can't get enough ownership with all the preference for somebody, so they do what's called a recapitalization, which is basically kind of taking a new entity and moving everybody into it so the deal works. But I think what's being asked here is really when private equity buys, call it 60%, 70%, 80%, even sometimes a high minority, those deals are often referred to as recapitalization. And those are very competitive deals. We're seeing private equity bidding right along with strategics in a lot of assets for a standalone new platform company, which would be considered a recapitalization.
Yeah.
So I just want to make sure everybody knows that's a good word too.
Yeah, no, great point. Question, we've had 2 questions on CBD. So I'll kind of throw that out there as well. And Enrico, maybe I'll let you tackle it first if you got any data or an insight on this. But where do we see CBD going? Growth is not as robust, but slowed. FDA has yet to approve for food beverage. Actual efficacy in some minds remains TBD. Others don't feel like that at all. Production qualities, various, so forth. And then the other question was saying, first time in a long time, CBD not part of the headlines. Please update and predict the CBD storyline. So Enrico, what are you guys seeing with CBD?
Yeah, and that's a great question. It's been a while since we've actually have talked about CBD around and where that's going. And prior to a lot of this happening, we just internally, when we discuss like CBD products and food products, is we don't know the long-term like really true health benefits around that, and how it would like implement the folks out there, drinking CBD and having all these extra cases. So and most of our analysis internally, I mean, we have some great data on it. I don't know all the numbers. We have a great team that's done a lot of research, but we haven't really seen a huge uptick, right, on CBD lately in brands, and I think that comes back to the consumers, ability to want to try it, but then not knowing the long-term effects of it in products.
Do you also, I mean, I have no idea with this at all, but do you see or foresee CBD specific brands or brands that have a CBD SKU? We've got products with CBD and without CBD.
Yeah, I'm seeing, we're seeing, or I've seen this personally, just me, is seeing that there are a lot of brands that are shifting to a CBD SKU in the marketplace. Whereas, they want to capitalize on the brand name and then have an offshoot to capture that long tail market of that consumer and creating a brand from there.
Yeah, that said, of course, you can still have CBD centric brands. There's the world for all. Greg, I know you're trying to get in.
Yeah, I would add to the second point, the benefit of adding CBD and kind of viewing it as a truly functional ingredient. You can liken it to that of caffeine. And as the ingredient matures and people learn more about it, I can see it becoming something similar to that, where it's known as a functional ingredient and maybe it's layered into a brand in terms of a energy brand, or for CBD's purposes, a brand that maybe provides other benefits that caffeine does not. And then to the first point, I think the biggest challenge with CBD right now, especially in food and beverage or any ingestible, is that it's almost impossible to get distribution in any meaningful way. So maybe there's some onesie, twosie independent mom and pop shops who are willing to take the regulatory risk to put you on shelf. But until the FDA makes a definitive ruling on whether or not an ingestible can be placed on shelf, and there's no regulatory risk associated with that, you're not going to see ingestibles in Kroger or Albertsons or any of the large grocery stores or mass marketers out there. Right. So these CBD brands can only sell through either these small stores, which you can't get scale, or you can sell through direct to consumer, which you're not going to see in the data. So I think CBD still has a lot of headway. It's just similar to cannabis. There's this regulatory component that makes it very difficult to operate an ingestible CBD company, which is why maybe we've forgotten about it, or it's something that isn't in the headlines as much as it was in 2018, because back then we thought the growth was going to be meteoric, and it's just been very challenging to grow because there's no opportunity to get that placement.
Yeah, we'll have to see kind of with the new administration and Congress, there might be something, there's clearly a lot of work to be done on lots of different things though, a lot of priorities. We've had two questions too on the gluten-free market and kind of where we're seeing things going there. Has there been a slowdown? Where do we kind of see things going? I've got to say personally, I've gone gluten-free in the past 2 months and my joints feel better. And I don't know what scientific study of one. I certainly see a lot of gluten-free products available in the marketplace. The anecdotal answer would be that a lot of them may not just be leading with gluten-free or a gluten-free centric brand, much like kind of the CBD discussion. But Enrico, I'm sure you guys look at this a lot.
Yeah, I mean, again, it's one of those things where maybe a sample of two, Mike, because when I try to go gluten-free and I jumped back off of it, was going to bounce, I did feel much better. And same thing, like joints and everything felt so much better. It's just like one of those where it's like you're on and you're off when you were traveling and stuff back in the days. But yeah, I think you're aligned there. There's been so many more predominant attributes within the different categories that people are probably just not realizing how much is still kind of gluten-free or labeled or certified gluten-free that you're actually eating in the marketplace. So, I mean, obviously, I think it's a diet trend, and it's a trend that's going to be here for a long time. I mean, more folks are still kind of seeing the benefits of it across outside of just the you know, having certain diseases that it helps to overcome. So,
Yeah.
the data is there to help prove that, you know, gluten-free is still there, but I think folks are shifting to other attributes predominantly first that are then based on gluten-free.
Yep. Had a comment, kind of question about like what happened to frozen in the post-pandemic world. You know, it was one of the last trends that we had, you know, last time and wasn't there again. Yeah, I mean, there are a lot of times where we try to not repeat trends. We fail on sugar, but we're seeing, you know, continued sustained growth in frozen and an uptick. And frankly, when we're in conversations with a lot of the strategics who own a majority of the brands you find out there, they are also seeing sustained growth. And when they kind of dig deep into talking to consumers, so it's not just an anecdotal answer, they've got real data behind this. They expect this just to remain. It's a lot of consumers have come into frozen over the last 14 months, and they've been exposed to a lot of new brands. We hear kind of pleasantly surprised at the quality of a lot of frozen products, and even talking to the strategics, they work to improve the quality over the past 3 to 5 years. But it was the pandemic kind of created this trial opportunity, and there are so many, there's several very, very strong natural organic frozen brands doing exceedingly well that we think are kind of in the next M&A target group. But what else? What the group? I'll throw it out there.
I think too, I've heard in I remember reading somewhere, is that even like deep freezes have, that supply and demand kind of went up for, the deep freezes since in the pandemic. So that's, driving the folks that potentially would never usually stockpile or have a bunch of frozen food all the time, because the freezer space at home was always so small, has really kind of expanded. And I mean, people are just not going to get rid of their deep freezers, post pandemic. So I think it's something where as products continue to get better and the taste and profiles get better, folks will have that more readily available at their house because they have a place to store it in a bigger freezer.
Yeah. Maybe we'll make this the last question. I know we're at an hour and 15 minutes here, kind of where we're trying to target things. And Enrico, this might be you too. It's great to have the data person on the Zoom here. What categories have you noticed that have not done well over the past years? I mean, I've heard, anecdotally and seen some data, some kind of, hidden center store items, products that have short shelf life. People are taking, less frequent trips to the grocery store, but then buying more. Impulse items have also kind of feel like they've been hurt a little bit with more Instacart type of shopping. But Enrico, you've got the real data.
Yeah. So I mean, looking at it, I think one thing that stands out to us is bars haven't done very well over the past year, just from one of those categories. And then I'm going to pivot a little. The channel that really hasn't done as well is the convenience channel. It's kind of one of those that was for a lot of early stage brands and folks really kind of looking at pre-pandemic before anything happened was like an area of growth without people traveling and being out as much. They definitely took a hit, the convenience channel. So I would say, bars as a category, not as well. And then, convenience, but, convenience is still right though. As we get back and people start to travel and vaccinations and stuff, that's an area that you still want to make sure that you're keeping your pulse on and doing some things with. Not overlooking them, because I think it will come back stronger than ever.
That's great. Maybe I'll just give everyone just an opportunity to say any last words, or then we'll wrap it up. But I want to thank everyone for joining us today. Almost all of you have stayed on, and we appreciate that. And we appreciate everyone in this industry, in our ecosystem, and we're happy to be a part of it.